Good morning, traders. This is Matt with Newbie-Trader.com, and this is your weekly gap wrap for Saturday, June 4th, 2016. Had a shortened holiday week this week, so we only had 4 opportunities to trade the opening gap. And we started off the week. There was basically 2 of the 4 days we opened in what we would consider our high probability gap range. If you're looking at the screen here, to the far left, you'll see a vertical green box. That is the high probability gap range, and you can see one of those boxes for each day as you move across the week. So the green line, the green horizontal line, that signifies the open. The yellow dashed line, or the gold color, that would be the half gap, and then the solid red line would be the 4 o'clock close, and then the skinny solid red line would be the 4:15 close. So you can see here on Tuesday, we opened inside our high probability range, and we filled both our half gap and our full gap on that day. And the same thing happened over on Thursday. We opened inside our high probability gap range. The market went up, filled its half gap and its full gap. On Tuesday and Friday, we opened up just outside the lower portion of that high probability gap range. And on both those days, they were able to close the half gap. And then on Wednesday, you can see they also closed the full gap. Yesterday, they weren't able to make it up and close the full gap, and they actually stopped and used the half gap as resistance. I've been getting some questions about our horizontal support and resistance levels and on this screen. So I'm going to spend today and do a little more explanation of exactly what that is. But basically, each day, along with getting our high probability gap range and the opens and those type things, we also provide our subscribers with these levels. And basically, think of them as this. We typically will give you 3 levels above the market and 3 levels below the market that we think that will act as key support and resistance for today. So the beige colored horizontal line you're seeing there, that's what we consider our daily pivot, or that's where we think the market's going to be drawn to and rotate around. And then we give the 3 red levels above, 3 green levels below, and we even color in one of the levels with more. It's like a darker shade or a solid, and that's kind of like the daily high and low that we think is going to be where most of the key buyers and key sellers are for each day. So these levels are actually generated through a combination of things. We look at some techniques you might be familiar with. We use Gann techniques. We use a lot of Fibonacci work, and then we also use Elliott wave. And what we do is we take all those techniques that individually work very well and provide support and resistance, but we then use it with a series of confluence, and we add in price action and value to that. And where we get those main confluence bands, that's where we come up with our support and resistance. That's how these areas are so reactive each day. So I'm going to go ahead and run through each day this week and show you a little more on how they work. Now we're looking at here, this is a 15-minute chart, and we're going back to Monday. You can see there's our beige colored area that we consider to be the rotational band for the day. And the market basically is riding above that band for the first part of the morning, and around 11 o'clock you can see we break down through that area, come back, give it a retest, start moving towards our green band. They come back to that beige area again for another retest, come down to the green first area of support. We would call that our first minor support zone. You can see the market stalls out there for about an hour, ultimately uses that as a support bounce, and it returns at the end of the day up to the beige band. So that's a look at Monday, and they just basically traded around one level there. Moving on to Tuesday, again, we opened up above this beige area, the pivot band, if you will. They tried to break down through it on the open, going into the open at 9:30, but you can see at the 10 o'clock reversal time, we had a strong move back up through that pivot zone. They came back, used it as support, and then for the rest of the day, it was just a stair step higher up into that first resistance area. And that did act resistance at the end of the day, and that's where the market closed. Moving into Thursday, we were opened up near our first resistance area, pushed through that pivot zone, made a little inverted head and shoulder pattern. They front ran the support area on the ES, but if you go look at our levels for the Dow or the YM, we actually hit our first buy zone right at the bottom of that inverted head and shoulder, 10 o'clock reversal time. They moved up to that pivot band, came back, used it as support, and then charged higher the rest of the day up through the next two sell levels. So Thursday was a nice move to the upside. And then finally here yesterday, as you know, it was the employment situation that came out at 8:30, and you see this big candle on the 8:30 news announcement. We were riding along under that first resistance area. Before the news announcement came out, that area acted as resistance. They pushed down, and then at 8:30 there was the news. It dropped right through our pivot, went down to our first buy zone, rotated all the way back up to our pivot, came back to the buy zone a second time, broke through this time, went to our key buy zone on the day. That area held as support, rotated back up. You can see once support is broken, acted as resistance, then it comes through, breaks through, acts as support, and then move up to the pivot. So long story short, these are great levels that you can use in your trading. It's where the buyers are, it's where the sellers are. We have a good handle on providing those each day, and no matter what style of trading you use, I'm sure these levels can be helpful to you no matter what your entry trigger is for getting into the market. And one last chart I'm going to show you today. This is another level you get when you subscribe. The key buy and sell levels that we were just reviewing are more longer term. I know some of you are scalp traders out there, are very short term traders. What we're looking at here is the S&P just for yesterday, again with that news announcement, and these are our micro pivot bands. Now these bands here, they act the same way. They're support and resistance, and once it's broken, it acts, once support is broken, it acts resistance, and vice versa. But on this screenshot, you can see it's a much smaller time frame. What you're actually looking at here is a tick chart. This is a 1400 tick chart, but you can go down to even tighter time frames. And these levels are for the very fast traders that want to get in and out. And again, we provide these levels every day. It's no additional. It comes along with the previous package. And with that, you can just have what we would consider minor support and resistance levels. And you can see how the market reacted throughout the day to these levels. Even on the news announcement, the rotations as it's stepping down, it goes to a level of access support, and then ultimately it comes back up through the level and it's resistance on the way up. So anyway, if you would like to have any of these tools on your computer, you can do that. Just go over to Newbie-Trader.com/ninja. We're actually running a trial right now where you can test us out for 2 weeks and see if this is something you would like. And so I urge you to go over there, and we'll go ahead and put a link in with this video as well. It's Newbie-Trader.com/ninja. Thanks for watching. Have a great weekend. We'll see you next week.